Today we're going to talk a little bit about the Ichimoku Cloud. It's about a 60-year-old indicator that was developed by a journalist in Japan, originally for trading rice futures, and actually has found its way into a number of different types of trading vehicles, whether they're equities, commodities, bonds, currencies. I found the cloud to be really helpful, but I've added a little bit to how I use it that's not as traditional. So we're going to talk today about the cloud, but we're also going to talk a little bit about how I use the cloud. So this is an indicator that tells us momentum. That is the most simple way to illustrate it. We're also redacting some of the other components of the cloud, the Kijin, the Tenkin, the lagging Chiku span. We're not incorporating those today because I want to keep this video very simple. I don't want to overwhelm anyone with a complicated chart. If you're of a more advanced skill level, you may want to skip this content. But if you're a beginner to intermediate in technical analysis, or if you're just not familiar with the cloud, I think you should stay tuned. So what we have on screen is the cloud with S&P 500 overlaid. And it's very simple to get a quick understanding as to what the cloud is telling you. So let's walk through several key areas. First, there's three things the cloud tells you at a glance. If you are in the cloud, you are trendless. If you are above the cloud, you are in an uptrend. And if you are below the cloud, you are in a downtrend. And this is within the time frame that you have the cloud. So you can see this is a daily chart. So from a daily time frame, the S&P is without trend according to Ichimoku Cloud. And this is after it recently corrected into the cloud. We can see that it's touched the top of the cloud and rejected today. This is post NVIDIA earnings where the NASDAQ was set to open over 1%. Now it's actually down so far. You know, anything can happen. But going back to the chart here, why is this an important chart? Because this is telling us that we're still in this sort of trendless state, that there are a lot more people positioned around this level, which means you get a little bit more jittery price action in the overall market. Now, I have a specialized version of the cloud. It's a trading view indicator. It's called volume weighted Ichimoku Cloud. Why do I use the volume weighted when the cloud, as I described it, is supposed to be where there's a lot of that concentration of positioning? Because traditionally, Ichimoku Cloud is essentially a complex moving average. It has some nuance. It's looking at highs and lows and averages of those over time. But I wanted to add some other data so that it's volume weighted. I want it to be something that has even more practical application and relevance to what it is we're visualizing. So while I have a great deal of respect to traditional Ichimoku Cloud, I think it's still 100% applicable. If I can use more data to power my decision making, then I will, and without question. I am, as folks who know me and how I trade and invest, I'm very data driven. And so I have heard from folks that the biggest criticism of the Ichimoku Cloud is it doesn't take into consideration volume. Well, this alleviates that concern. And so it becomes even more practical. So let's talk about another element of the cloud, because we know that we're in the cloud, it's trendless. If we break above it, we get into an uptrend. If we break below it, we're in a downtrend, right? The other part of the cloud, as you've noticed, is it twists between red and green. Green twists, and when we're in a green section, are more constructive. That's more bullish. That's the cloud saying, you know, price action is likely to be more healthy to the upside, particularly if we're above the cloud. You've got those red twists. That means that we're a little less optimistic here about momentum, and if we slip below it, you have some serious risk, right? So this is the really easy at-a-glance visualization. So putting it all together, if S&P was able to break above the cloud here on a closing basis in this green rising cloud, that would tell us we're in an uptrend, we're in a healthier part of the cloud to support that uptrend, and that would give us some confidence to start initiating longs, using the breaking back into the cloud as a stop out point. It sounds easy because it is easy. It's a very simple visual indicator. And in future videos, I will add some more nuance and intricacy to the visualization to further illustrate the other indicators that Ichimoku Cloud builds in. but also to talk about how I incorporate it with my other preferred indicators on the chart, like volume profile, relative strength, and otherwise. So I hope that this video has been really helpful. It's a short 5-minute video about the Ichimoku Cloud. If you have any questions, please post them below, and I will see you next time.